Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 31st of January. Starting off with the FTSE 100, which is not too far off from our 87.20 target there at the top of that black rising trend channel. We've been looking at that for a few weeks. We're also assuming that the consolidation that we had over the past couple of weeks was a mid-move consolidation, and that would actually logically head up not only to 87.20 but as high as 9,000, perhaps as soon as the end of March. Now it could actually be by the end of February. Ideally, we stay above the 8600 area, which was the flag breakout that we had just yesterday. Worst case on the downside, a pullback to 8400, but with every day that passes, and especially with the latest breakout, that looks relatively unlikely. Moving on to the DAX, and here you can see that we've got decent breakout continuing, rising trend channel shown in red there from October, so we've shifted up a gear, top of that channel 22,000, looking for that by the end of next month, which obviously looks as though that is being a bit generous on the time frame, and that's valid while we hold above the top of the old channel there, 21,300. Worst case is to be able to head back to the floor of the October channel there, 20,700, before hitting 22,000, in fact 22,100 now on that resistance line projection. Moving on to the Dow, and here the picture is one of decent consolidation just near the record highs, just through 45,000. Top of the channel there from back in March as high as 46,300, looking for that by the end of next month, while we remain above the rising 50-day line at 43,700. All eyes still on Bitcoin and whether we're going to get a new record anytime soon. The current situation is that we're still in that range between the rising 50-day line and the recent record highs through 109,000. Looking for an end of day close above 109, and hopefully that would then give us a new leg up to as high as 122,000, the upper parallel of that April resistance line, and hopefully looking for that by the end of next month. We've got that resistance line there from April heading for 110,000, so that's obviously the initial target there. Early and end of day close back below the 50-day line at 99,000, risks a move down to 93, and the November support line, we did have an RSI rebound at neutral 50, so that's what we're enjoying at the moment. Moving on to gold, where also the records have been in sight. In fact, they've been exceeded. We were looking for the old October resistance just above 2,800 to be broken quite imminently, and that's happened by quite a long shot. Then suggested that 2,970 could be hit by the end of next month, which at the moment looks as though we might not need all that time, but at least above 2,800, looking for 2,970 on gold, which would be quite a coup, and hopefully start feeding into some of those gold stocks. And as I said, 2,800 to 2,750, I suppose, now the support area, but ideally we hold above 2,800. Moving on to the stocks, and one which I've looked at quite frequently in the recent past, which is Active Energy. A slightly a difficult chart, but we have hit our target there, which was around the 0.36 level. That was derived by, or from, the top of that gap down there from April last year. Above that now, looking for the next gap higher, which is at 0.5 pence, hopefully by the end of February. So we just draw that line in to see whether we can hit that. Ideally, we stay above the 0.3 pence level now, which is basically December and January initial resistance for that stock. Good things, or a good look at the moment for Angle, and here you can see that we're heading rapidly for our big target here at 20 pence. We had the breakout there through the 200-day line and through the old resistance line there from February last year, so that's all progressing nicely, and at least while we're above the initial January resistance at 13.5, looking for 20 pence on Angle. Stock which has also been followed here all the way up from the lows is Alkemy, and here the big breakout, I suppose, was the break of that resistance line there from May around 40 pence, and then after that the break of the 50-day line. And it's been up and away most of the way, in fact, but sort of 3 steps forward, 1 step back in the post-November period, and gap higher today, and very decent news with Viola. Looking for the ultimate target here as high as £2, which we have been looking for quite some time, and that's also quite near at the moment. Looking for £2 while we're above the £1.64 level, which was resistance on the way down earlier in the month, and hopefully we'll get to £2 well before the end of next month. On to Ananda, and here still remains one of the brightest situations on the aquas market, although it's not saying that much. Here we've got rising trend channel base. We've had the golden cross there, and we're just ricocheting off the 50-day line there at 0.42. Looking for up to 0.62 perhaps by the end of next month. Ultimately, end of Q1 target, perhaps as high as 0.8 pence. But the key here really is staying above the 50-day line, as we are doing at the moment and have done so since the middle of November, which is quite impressive. Guild Esports has changed its name to something sounds much more professional, obviously, Castle Capital, and here you can see that we were already rising ahead of the name change. We were looking for a second target there, the red line, up to 0.11, which we narrowly missed today, above the first target there at 007, looking for 0.11, and then ultimately the upper parallel of that second target, and the 200-day line near 0.16, hopefully by the end of February. Requested, well, actually, no, it's not requested stock yet. The first one is Empyrean, and then we'll have a requested stock. Here you can see that we are settling nicely above the 50-day moving average, which is now starting to rise, so it's a sideways shuffle, and also what I call a V-shaped bull flag, hoping for a decent break of 0.14, and then going up to as high as 0.27, maybe by the end of next month. But the key here is staying above that 50-day line at 0.1 pence over the near term. We've already had the turnaround with the trend line break near 0.007. Finally, onto the requested stock, which was Mosman, and here you can see yesterday we broke that line of resistance there from back in July. You could argue, I suppose, exactly where it is. Perhaps it's more like that, but still means a break of the 50-day line and that resistance line there from July at 003 should take us up to the initial resistance here around 0.05, and then ultimately the big prize would be a retest of 0.08, hopefully by the end of March, but that is assuming that we stay above that 50-day line. In the meantime, it's nice to see that the 200-day line is rising, so a weekly close-up of that would be a positive. Next time the 50 and 200-day lines cross, it'll probably be a golden cross, so that is something positive to look for and should drag the share price higher. On to Microlise, which I've been championing over the last last week, I suppose, breaking that resistance line there at £1.14 and looking for £1.40 by the end of February, which hopefully will be plenty of time for it to get to that destination. See the resistance there, the last resistance at £1.45. On to the last two. The first one, a rather bigger market cap than we normally look at, which is Raspberry Pi, and here I think there's been some stake building. It does look as though somebody likes this company a lot. £9, so £9.10, the technical target there at the top of that rising trend channel from October, and we're looking for that, especially while we remain above £7.20, which has been recent neckline or recent resistance for the shares on several occasions. Above 7.20, 9.10 looks as though it should be in the bag. Finishing off with one of the Bulletin Board Heroes winners of the recent past, which is Trellus. An interesting setup here in the sense that we've got the shares in a triangle. We're looking for an end-of-day close through 3 pence to give us a retest of 5 pence, and hopefully that will happen sometime during February. Ideally, we don't even go back now below 2.5 pence for the triangle. You can also see that we've got the 50 and 200-day lines both rising at the moment, probably a week or so away or less from a golden cross. And that tends to be the strongest part in the cycle. That's it for me today. More updates over the weekend.